What's up? And welcome to our video on the 2023 stock market trends to keep an eye on. To help you make smart financial choices, we'll discuss recent developments in the market, present relevant data and insights from experts, and offer practical advice. This video is an in-depth discussion with Jared Blicker from Yahoo Finance, Michelle Mish Schneider, Director of Trading Education at MarketGauge.com, and David Keller, Chief Market Strategist at StockCharts.com, discussing trading, investing for newbies, cryptocurrencies, and AI. But before anything else, please click the like and subscribe buttons. Also, make sure you subscribe and enable notifications. Let's dive in right now. The technology industry has been one of the stock market's fastest growing areas in recent years, and this growth is anticipated to continue until the end of 2023. Due to developments in areas such as AI, cloud computing, and big data analytics, the IT sector is predicted to continue to lead throughout the year. Apple, Microsoft, Google, and Amazon are among the most exciting corporations in the world right now. David's interview response to Jared's question about the tech industry was as follows. From the lows in October, the stock market has gone on a remarkable run, taking investors on a roller coaster of emotions. The audience also enjoys it when Jared talks on the use of charts in assisting investors in spotting shifts in the market. It's crucial to recognize when the market has changed its nature. One of the biggest changes that occurred was rates going from moving straight up for the 10-year to 4.25 to coming off, which allowed room for growth stocks to start to flourish. The dollar has also been on a rip to the upside through most of the year, but it suddenly pulled back, which was a game changer for stocks like Microsoft and Apple. Mitch joins the conversation and shares his thoughts on what he's looking at in 2023. Based on history and the record inflation numbers from last year, he doesn't believe that inflation has peaked and only took a break. He's curious to see what will happen with the Fed, as they've gone from aggressive tightening to more of a pause at this point with only 0.25%. Despite the positive trends, there are still questions about the sustainability of the market's growth. As long as rates remain fairly low and the dollar remains relatively weak, growth stocks like Peloton and Tesla should continue to thrive. However, if either of those things changes, the question mark starts to come back in Jared's head when he looks at the chart of Apple and Microsoft. You may diversify your portfolio by looking into ESG investments in addition to the tech sector. The areas of environmental, social, and governance have emerged as key movements in recent years and are projected to accelerate in 2023. Investors are increasingly seeking out companies that share their values as they become more aware of the effects their investments have on the world around them. Strong ESG policies and practices are in high demand, and this trend is projected to continue. Keep these two things in mind as you delve into your investigation. Some factors that can affect the stock market are inflation and interest rates. Investors should be prepared for the market's reaction to the Federal Reserve's predicted rate hike in 2023. Consumer spending and corporate operations may feel the effects of inflation if prices continue to rise. Investors need to keep an eye on these variables and make adjustments to their investments as necessary. You may also look into the rapidly growing economies of China and India, two of the world's emerging markets whose importance to the economy is only projected to grow in the coming year. The investment potential in these areas is high, but so are the associated hazards. It is important for investors to be aware of the political and economic risks involved with investing in emerging economies and to use a diversified approach to mitigating those risks. We're getting close to the end of the interview, but this is something to keep in mind for later. For those of you just getting started in the business world, I believe this one will be a great resource: Bitcoin and other digital currencies. In the course of the conversation, Jared probed David and Mish with questions about their crypto speculations and showed them Bitcoin's historical price chart. In essence, this is their reaction. David argued that whether or not you are putting money into cryptocurrencies, you should be aware of their status as a major asset class. It's hard to know where to begin in this world of constant distractions. But widely followed cryptocurrencies like Bitcoin and Ethereum have enormous potential and may even determine the course of future finance. Bitcoin's chart is displayed by Jared, who explains their analysis. Something changed in the fourth quarter of 2021, and Bitcoin hit a new all-time high of nearly $70,000. Yet, it immediately reversed, exhibiting the classic bear market pattern of lower lows and lower highs. But the tides are turning, and Bitcoin appears to be entering a bull market. What follows is some information from textbooks that might be of value to anyone. An uptrend is defined as a sequence of new highs and new lows, as proposed by Charles Dow more than a century ago. Bitcoin's price broke to a new swing high, pulled down, and produced a higher low in February, signaling a rotation back to the upside if one examines the price chart around the $21,000 to $22,000 price range. Hence, we need to switch from a sell the rips approach that worked well last year to a buy the dips mentality that is more likely to benefit us today, provided that we are able to maintain that swing low from February. Mish made a good point in emphasizing the importance of the time frame. It's intriguing that Bitcoin found resistance just below $25,000, and it's where the 50-week and 200-week moving averages intersect. In addition, Bitcoin is unsure about its long-term goals in relation to not only the cryptocurrency industry, but the entire US economy as a whole. We have no idea if it will decouple from interest rate increases, bringing it more in line with the decentralization movement, or if it would even react to them at all. What exactly lies ahead of cryptocurrencies is anyone's guess, but one thing is certain: they are here to stay. For this reason, it is essential for investors of all experience levels to be aware of this new asset class. Also, you might stumble onto an incredible business opportunity. Included below are some suggestions that should make trading far less difficult and risky for you. Stay with the reliable sources. Similar to what we're doing in this video, you can examine the market's past trends and patterns to see if there are any clues to how they might apply to the present. Seeing how the past can teach us about the present and even give us clues about the future is always fascinating. Mish said in the interview that when she is researching a topic, she also searches for reliable sources who have a history of giving in-depth reporting and analysis. There is a lot of background noise and false information floating around, so be picky about where you get your facts from. Yet, if we approach the markets with an open mind and a willingness to learn, there are many excellent tools at our disposal to help us succeed. She was a renowned merchant, so if they were still looking for reliable information, you should be too. In general, it's important for traders to keep tabs on market developments. It's not enough to look at the graph. We also need to understand what's really pushing the market higher. Investors may set themselves up for success in the coming year by remaining vigilant and flexible in the face of market volatility. In conclusion, 2023 is forecast to be a year of notable trends and changes in the stock market. Investors would be well to monitor these tendencies and make adjustments to their holdings as needed. Throughout the year, investors can position themselves favorably by monitoring the IT sector, ESG investing, inflation and interest rates, and developing markets. This ends our video. A like and a subscription would be greatly appreciated. We appreciate you for watching, and we hope you find this information helpful.